strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand. And that's the important thing going into 24.
Tesla recently published its Q4 delivery stats. And if you're an investor in the firm, you should definitely listen to this. The manufacturer has once again demonstrated why it is a unique company.
Figures. So that is something to look forward to. We did not have earnings catalysts, but we did have some of these electric vehicle delivery numbers. So starting things off with the behemoth of the EV world, that is naturally Tesla, which had very much a banner 2023, but reporting Tuesday above consensus deliveries for the fourth quarter. And in the process, it did reach that annual goal. Analysts were generally upbeat about the numbers. We did see that one analyst called this a major achievement as far as their fourth quarter deliveries go, coming over 484,000 units. That exceeded the 480,000 units that had been expected, and another figure called for around 478,000 units. So whatever the forecast you were paying attention to, this did come in above that. Production also came in at 495,000 units, in line with a lot of what had been expected at around 500,000 units, but some were a little bit more optimistic. Again, I think it's what really depends on what prediction you were paying attention to. But the production shortfall versus expectations, some analysts said, reflect this strong inventory control during the quarter. Model 3 and Y deliveries were strong at 477,000 units, with China a clear area of success. Now, Dan Ives, who we have to discuss when we discuss Tesla, naturally did say this was an important quarter for Tesla to show really strong deliveries and the strong momentum into 2024. He has also highlighted the uptick they've seen since third quarter as far as their global checks. So naturally, Ives is one of these notorious bulls, but I do think he makes some good points. We are seeing some selling today. Initially, they opened a little bit higher. I was watching the price off the open. We're now slightly lower, but not really. I mean, like, not seeing massive outperform or underperformance, just given the rest of some of these major tech names and their weakness today.
Yeah, the market's taken a little bit of a swing to the downside since we began talking here on the show. So I'm not surprised to see Tesla swing negative, but it's still outperforming the overall market. I thought Mark Delaney at Goldman said it best. He just said they're solid numbers, and that's what we've sort of become accustomed to seeing from Tesla. What the market does with them, that could be anybody's guess, and it seems today the market likes them.
Right, and so now to shift gears and look at a name that the market isn't liking so much as far as their delivery numbers, that is Rivian. As Rivian has been more of the younger brother to Tesla as far as its production and some of its production flaws go, but we did see they produced around 17,541 vehicles versus the 10,000 that we saw about a year ago at their production facility that is actually not far from Chicago, but in Normal, Illinois. They did deliver around 14,000 cars in their fourth quarter. This fourth quarter delivery figure was below their third quarter figure and below consensus. For 2023, the company produced around 57,200 vehicles and delivered around 50,000 vehicles, which exceeded actually management's most recent full year production target, calling for around 54,000.
The performance of Tesla and Rivian in terms of EV deliveries is discussed by the speaker. With 484,000 units delivered in Q4 2023, Tesla outperformed expectations for a strong year. 495,000 units were produced, which was on target, and sales of the Model 3 and Y were robust, particularly in China. Experts, like as the optimistic Dan Ives, believe that Tesla's momentum into 2024 will be greatly aided by this quarter. Rivian, who is frequently regarded as Tesla's younger brother, however, had difficulties, although generating 17,541 cars in Q4 compared to 10,000 in Q3 last year. Q4 deliveries, at 14,000, fell short of Q3 totals and 2023 projections. Rivian stock continuously drops even if they surpass their annual production target. This could be because of the competitive EV market. The speaker points out that, particularly in light of Tesla's success, strong beats are essential for excitement. The competitive nature of the EV industry and the necessity of notable accomplishments to elicit a favorable response from the market are discussed. The announcement of Rivian's fourth quarter earnings on February 21st is cited as an important driver. The speaker concludes by stating that 2023 was a good year for Rivian, despite experiencing frequent stock sell-offs. The speaker expresses admiration for the Rivian SUV and has a personal experience with it.
and our next guest, he was right about the big rally. Dan Ives, Wedbush Securities Analyst. I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over-under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be
good
here.
Good to see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. You know, Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand, and that's the important thing going into 24.
Yeah, where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD. Gained some net share from NIO and others. And in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking, that's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
Dan, I have to get your take on Apple this morning with Barclays revealing its downgrade over cooling iPhone demand. Do you agree with the assessment there? Your channel checks showing the same thing about the demand picture for iPhones?
I mean, the last 48 hours, it hasn't changed from what we've seen over the last month. I mean, look, and I get some of these calls from a valuation perspective, and many that have been naysayers over the last year. But if I look at iPhone 15, we have not seen number cuts from our checks in Asia, and that's important because I think it shows that this upgrade opportunity is actually manifesting for Apple. I actually think the mix is much more Pro, specifically Pro Max in China. I think what that ultimately means is that this is going to be an iPhone number that comes in above expectations. But the most important thing, and David's talked about a lot, services. I still think this is going to be teenager type of growth, not single digits. If that's true, and we believe it is based on our checks, I think this is ultimately a stock that could go 30, 40% higher this year.
Wow, right. Well, you get potentially even a higher multiple again as services becomes an even larger part of overall profit. Let's talk broader tech here. Again, our viewers see you often, so we know where you stood towards the end of last year. This is going to be a big AI moment, and it's going to create a bull market overall for how many companies in technology this year, Dan?
Well, yeah, and talk about it here is that our new AI checks, and me and you've talked on the program a lot about use cases. Mm-hmm. Use cases are exploding. I mean, the average enterprise right now that we're talking to is seeing 15 to 20 potential use cases within their companies. That's why right now we think it's going to be 8-10% of budgets. And I think that's the important thing. You look, it's not just the godfather of AI and NVIDIA and Jensen. It's not just what's happened in Redmond. I think you're going to see this spread across the board in software and chips, which is why we believe tech stocks will be up 25% this year. And we could have some ebbs and flows, but I believe it's get out the popcorn moment. The new tech bull market has begun.
The guest, Dan Ives from Wedbush Securities, made precise predictions regarding the market rally, and the presenter remarks that this past year has been among the finest in the last 20 years. They begin by talking about Tesla's performance, and Dan Ives thinks the firm might do better than expected, particularly given its impressive performance in China. The topic of competitiveness in China comes up, where BYD is a formidable rival. Dan points out that there is no continuous price war, which leads to price stabilization, and that Tesla and BYD are stealing market share from other competitors in China. He highlights how crucial this is to Tesla's future expansion and projects the company's market capitalization to reach $1 trillion in the upcoming year. The discussion then shifts to Apple and the downgrade of Barclays. It is to waning demand for iPhones. Dan disagrees, saying that data from their most recent investigations indicates that there is room for improvement with the iPhone 15, especially in China's Pro Max market. Additionally, he draws attention to the potential for growth in Apple's services and projects a large increase in the stock price. With an emphasis on the AI moment, the conversation expands to include the entire tech industry. According to Dan Ives, there are 15 to 20 possible use cases for AI in businesses, and these use cases are growing rapidly. According to his predictions, AI will account for 8 to 10% of spending on chips and software. Most people think that this trend will be positive for tech stocks.
What is the storyline for you, Dan? You know, you meet the stated 1.8 million target, but I remember a year ago, the first earnings call of the year in January 2023, Musk touting, well, we could do 2 million maybe. So what does the scorecard show all told?
Hey, Ed and Carolyn, thank you so much for having me. Yeah, I think the story of 2023 was that we were pulling back from a period of EV euphoria. And if we just contrast what's going on now versus where we were 2 years ago, where the market was fully supply constrained and demand was not at all a concern, that's not the case now. Now we have questions about demand, even so much to the point that Tesla acknowledged on the last earnings call that there were some macro concerns and it would not be producing as much as it could in its Austin and Berlin facilities simply because of some of these macro questions. And so the story going forward is, how do we deal with this period of some demand uncertainty within the EV market?
The storyline that we're leading on at Bloomberg is that Tesla's lost its crown to BYD. BYD, the sort of biggest standalone seller of battery electric vehicles. And we knew that was coming. Does it matter if Tesla is eclipsed by BYD, which is kind of predominantly focused on the domestic Chinese market?
It doesn't necessarily matter per se, in the sense that there is room for multiple players. And if we just break apart the markets, yes, BYD eclipsed Tesla this year. Within battery electric vehicles, Tesla still beat BYD. Tesla was at 1.8 million, I believe. BYD on battery electrics was 1.6 million, something along those lines, with the remainder being plug-in hybrid vehicles. If you look at it on a regional basis, that's where the dynamics really vary, because in the U.S., Tesla is still the dominant EV name. In Europe, Tesla is still a top 3 or so player in the BEV market. China, Tesla is still, top 2 or 3. It's BYD that's really taken the crown, and it's China where we saw a lot of BYD sales accelerate. The other story that we saw emerging in 2023 was the rise of Chinese exports to Europe and to other markets. So, yes, there's more competition from Tesla from BYD, but there is still room for Tesla to grow. It's just a question of, in the markets where Tesla's serving, where is the demand for that?
Yeah, and spin us then into 2024, when we're thinking of a BYD getting into Hungary and producing there, when we're thinking of two very different price points ultimately remain on top for Tesla in terms of profits and revenue because they make more expensive cars. Will Tesla ever want to go lower to be able to serve and get in on that highly competitive state that there is in China, or should it be staying in its lane?
Well, that's ultimately the goal for Tesla, right? That was something that they outlined at...
In the video, Dan, the speaker, discusses and looks ahead to 2024 in regard to the Tesla storyline for 2023. Moving from a supply constrained to a demand uncertain market in 2023 presented issues for Tesla. Though BYD now holds the title of largest solo seller of battery electric vehicles, Tesla is still competing in a number of regional marketplaces. The growth of Tesla in the United States, Europe, and China is discussed. One noteworthy tendency that stands out is the increase in Chinese exports. Regarding 2024, Tesla has set a volume target of 2 million units, which falls short of the consensus due to a dearth of fresh, incremental goods. It is anticipated that Model 2, which should launch in 2025, would spur growth at a cheaper cost. The impact on quantities and manufacturing challenges of the Cybertruck are also discussed. Dan advises lowering projections for Cybertruck sales in 2024, projecting 20,000 units because of a gradual ramp and possible demand uncertainties. The conversation moves to the larger market for electric vehicles, emphasizing the transition from early adopters to the early majority. The U.S. federal tax credit, which is now available at the point of sale, is thought to be beneficial for market expansion. To appeal to a larger user base, however, issues like range anxiety and charging infrastructure must be resolved. It's well known that traditional automakers find it difficult to compete with Tesla's capacity for price reduction. In conclusion, The film discusses Tesla's performance in 2023, projections for 2024, market obstacles for electric vehicles, and demand-influencing elements including cost and government subsidies.
Well, Tesla is a top trending ticker on Yahoo Finance this morning. Shares moving to the upside in pre-market trading, up just about 0.7%. The move higher coming after its fourth quarter delivery numbers topped expectations. Pras Subramanian joining us now at the table. Pras, there was lots of questions about whether or not Tesla was going to reach not only its fourth quarter goal, but its yearly goal, and it looks like this was enough to get it there.
Yeah, just barely here, just the numbers just crossing right now. Delivery-wise, 484,000 for the quarter, beating estimates of 483,000 compiled by Bloomberg. Production-wise, 494,000, almost 495,000 vehicles compared to 482, so a big beat there. They made a lot of Model 3s and Model Ys during the quarter. Both they don't break out regionally, so you don't know where they're made, but definitely made more in China and the U.S. and Fremont as well. For comment and context here, for the year, 1.81 million cars now for the year globally. That's 38% higher than a year ago. So not a little bit below that 50% compound annual growth rate, which we knew that they were not going to hit because of factory shutdowns and tweakings and things like that. But production sloped 35% year over year to 1.85 million. That's some strong numbers there. No one is really making EVs like they are, except for BYD in China, which I know we're going to talk about.
Well, that's the exact question, right? To what extent does Tesla have to worry about some of those other names here?
Yeah. So in this quarter, in Q4, BYD made 526,000 pure EVs. In the quarter. That's obviously more than what Tesla made. For the year, Tesla is still higher, right, for the pure EV numbers, not just hybrid. So still a ways to go, but they're catching them for sure. And we talk about BYD. Look, they're not just China. There's 70 countries around the globe, expanding in Europe a lot. Mexico too. So there's going to be a lot of pressure on Tesla to sort of, how are they going to meet their growth rates if China is already or BYD is sort of eating into their competition?
Yeah, and it just also shows how dominant China is in the EV market, how big of a player they are, obviously not only in terms of some of the demand that they're seeing within China, but what that global growth picture looks like and how much pressure a lot of these companies could be under here.
Right, exactly. I mean, the China story continues to be such an important narrative, particularly as that growth just hasn't come back the way that a lot of the folks on the street that we talked to had anticipated.
Tesla is featured in this video as one of the top trending stocks on Yahoo Finance. The company's shares increased 0.7% in pre-market trading as a result of better than expected fourth quarter delivery figures. During the quarter, the business produced 495,000 automobiles, more than 482,000 expected, and delivered 484,000 vehicles, above estimates. 1.81 billion cars were produced globally in total this year, a 38% increase over the previous year. However, because of manufacturing closures, it marginally underperformed the 50% compound annual growth rate. Notwithstanding the encouraging figures, competition worries are voiced, especially from BYD in China, which produced 526,000 pure EVs in Q4, more than Tesla produced in a year. The film makes the argument that Tesla might come under pressure to keep up its growth rates, particularly if Chinese businesses like BYD go worldwide. The emphasis on China's dominance in the EV market draws attention to the possible difficulties that other businesses in the sector may face.